Good morning, everybody. There's a lot going on out there, so let's get to it. So from the Friday before last to last Friday, lousy week. So what happened and what does it mean for the portfolios? Well, I listened to a guy who was a technical analyst, the chart guy. And he said the last time we saw gold rise for 9 straight weeks, which is what we've had, and then we had a correction, it corrected down 36%. Well, when he said that, my eyes got big. And then when I said it to Walt, his eyes got big. I thought, wait. 1979 versus today, these are very different situations. Back in 1979, look at this guy. This is Paul Volcker. Who was Volcker? He was chairman of the Federal Reserve. He was fighting inflation like crazy. He ended up hiking rates so high, the prime hit 20%. Back then, though, the debt was only about 830 billion, not trillions, billion. We were trying to strengthen the dollar, and the US actually had a trade surplus. We were still an industrialized nation. So here was Volcker, this tall, little overweight, balding, cigar chomping white guy who really understood money. And he knew we had to break the back of inflation, which had been running out of control, starting with Nixon into Ford, and certainly went into hyperdrive under Carter. And at 20%, Americans gave up. They said, well, why am I spending? I should be saving money. CD rates are 16, 17%. I can buy government bonds paying the same. And when the velocity of money slowed down, the back of inflation broke. Reagan then came on the scene, and up we go really for about 20 years in stocks. An amazing story. Compare that to today. We've got Chairman Powell, who's in the exact opposite situation. He's not raising rates, he's cutting rates. And by the way, those will be coming sooner rather than later. We have 40 trillion of debt almost. The world is de-dollarizing, and we're trying to weaken our currency, not strengthen the currency. It's almost the exact opposite situation. By the way, the big takedown on Tuesday, the headline that day was by first quarter next year, we'll be 40 trillion in debt. And then gold gets smacked down. So who did it? These were the professionals. This wasn't the public suddenly racing out of this stuff. Let's go back to our premise of bull markets. Whether it's a bull market in stocks or real estate or bonds or metals or commodities, they're always the same 3 phases. Think of it as a baseball game. The first 3 innings, phase 1, quiet buying, typically by people who know stuff that you and I don't know, the really big guys. They see a sector that's been beaten down, and they don't tell anybody that they're going to be buying because they don't want to push prices up. And so quietly they buy. Now, of course, eventually their money is so big it starts to pull prices up. In the commodities and precious metals world, this probably started in 2019 into 2021, 22. Well, at some point, it attracts attention, and we enter phase 2, which is where we are right now. The professionals get involved. They're not content to let something rise gently. The Wall Street traders want to trade it, baby. And the chart changes. Instead of the gentle rise, we get 2 steps forward and a knee buckling step down. And the knee buckling step down is meant to keep the public out. Oh, Greg, this is just too scary. I can't do this. It's too volatile. And I get that. By the way, they understand that emotion, which is why they do it. On a chart, though, what you'll notice is every high gets higher. And more importantly, every low gets higher. And that's exactly what's going on right now. The pattern hasn't been broken. Now, the severity of this was a surprise. This was clearly a coordinated, concerted, organized takedown from lots of different players who were probably on the wrong side of the trade, and they needed to slam gold and silver down in order to get out from a short position, but I won't go into all the details on that. The point is it over yet? It wouldn't surprise me if you have a little bit more follow through. And then over the next several weeks, you'll start to see it all climb back up again, probably to a new high. Now, at some point out there, and by the way, that's much different than 1979 too. In 79. In 1979, the public was involved. And just a quick story here. This is my, I call it my college roommate story, even though he wasn't my roommate. A guy named Jeff Kildow, a cadet at West Point. I remember we were both seniors, firsties. And Jeff came up to me and he said, Z-Man, I just bought $40 worth of gold from my broker in New York. I mean, you have a broker in New York? I was a cadet. I didn't know anything about this. Oh, yeah, you just call this guy. And you can. I look back on this and think, Jeff was as dumb as I was. We don't know anything about anything when you're a cadet. You're just trying to graduate. But he'd gotten all wrapped up in the hype of gold and silver were rising like crazy in a mania back then. This isn't that. So this is a much different thing. That's phase 3. Phase 3 is when the public gets involved. And here's what happens after a long enough, too forward, one back, 2 and forward. The public gets comfortable with the trend. Hey, Alice, we should get into this. Look how great it's doing. Then we go straight up. And as Walt says, it looks like on a chart, half of the Eiffel Tower, you're just going straight up. That's actually when most of your gains will come. And in the most compressed period of time, it's a mania. And the public is almost always wrong. At this point, the professionals step aside. They can't trade this. It's too much money. It's a tsunami. They'll look for another opportunity. We're not in phase 3 yet. When we get there, Walt and I are probably going to feel like those prairie dogs out there. You know, look at when do we get out? And we've talked about the strategy. We talked about that last week. We have a discipline. So did this feel good over the last week? No. Have the fundamentals changed? No. Is it actually normal for phase 2? Yes. Is making money easy? No. And that's why everybody doesn't make money. So we want you to be part of that minority that does. So with that, I'll turn it over to Walt.